Hi, good evening. Welcome to this very special webinar on the launch of a new feature at Grip called Infinite. Thank you for taking time to listen to Vaibhav and me present about this feature and some of the latest developments at Grip. Vaibhav, over to you.
Hello everyone. Thank you so much for taking the time out today to attend this webinar, and we are so excited about this new launch that we have done. There was some waitlist, and now it is available to everybody. And yeah, we'll just dive into it right away. Shall we start? I can't see
Yeah,
that.
absolutely. Let's start.
Okay, just is there a show of hands kind of a feature? Just want to understand, like, are there users here who are new to Grip, who have not invested in Grip up till now? Because I feel a lot of our users would be are already engaged users. So is there a show of hand kind of a feature here, or a chat box, so that we can accordingly cover the context of the webinar?
I think Vaibhav, let's assume that there are a lot of people new to Grip as well. Most sessions will have a 80-20 rule, so let's progress on that basis.
Okay, cool. So that goes right into it. Why don't we first talk about, why don't you, Nikhil, talk about the overall landscape of corporate bond market? I think most people think that it is a new and upcoming market. It's a niche market, while the reality cannot be further from that. So why don't we just take a moment to discuss how large is the corporate bond market?
Yeah. No, keeping the suspense of Infinite a bit longer, but I think the context setting is very important. And for many of us who are new to the bond market, it's important to appreciate just how large it is and why Grip is doing what it is doing to make this market accessible to you as a retail investor. We were surprised to know that the bond market in India is actually about 4 times larger than the equity market. The graph that you see on the slide is a graph from SEBI's presentation, where the dark blue color is actually the debt issued or corporate bonds issued, while as the light blue color at the bottom is the equity issued. Just the visual representation represents how large corporate bonds are as a market. And for example, just in financial year 25, the financial year that went by, nearly 10 trillion rupees worth of bonds were issued by companies in India, representing the scale of this market. What has been somewhere unfortunate is that this market has been open only to large institutions, a few hundred institutions who are participating in this, restricted by a larger transaction size. All of this has now changed, and we're fortunate at Grip to be at the front of that revolution. Infinite is one more step that we are taking to make that revolution powerful for you as a retail investor. I think appreciating the size of the market also goes back to talking about the improvements in the regulatory infrastructure, security infrastructure that have played out over decades in India, which now you as a retail investor get to benefit from, and hence be in the comfort that this is not a new asset class or something that has never been tested before. It's actually a very, very established asset class with very secure investment history.
Yeah, it's rather, like just it's amazing how large is the market, overall market, and 4 times bigger than the equity market, and still the individual investor participation is at the levels that we see today. So just on that note, you spoke about Infinite is the next step in our journey to democratize this retail participation. Can we just go back a little bit, and can you walk us through on how we have been able to solve this problem in, with small steps and large steps, and what have we done to really transform the way that retail participation increases now?
Yeah, absolutely. Obviously, very proud to of the journey that we have done at Grip as a team, and I think it's good to start with a quick introduction of what we are. So GRIP is a SEBI-regulated platform holding a license called OBPP or Online Bond Platform Provider. We're licensed by SEBI and integrated with the National Stock Exchange to offer fixed income products like corporate bonds to retail investors. Till date, 35,000 users have come and purchased these products on GRIP for a total amount of 2,000 crores. GRIP today accounts for nearly 16% of all retail trades executed by OBPP platforms and able to give investors a net return of 12.5% on a yield basis for these investments. We're fortunate to be backed by some of the large venture capital firms in India, many of whom specialize in fixed income investments, bringing all of that expertise to what we can do for retail investors. As we have been on this journey, I think there have been two principles at work at GRIP. And we believe that these two principles is what makes a very powerful investor proposition. Principle number one is great investment products. Obviously, you're coming to us or you're looking for coming or investing in fixed income because you're looking for a great investment option, and that has to be at the core of what anyone offers. Equally important has to be powerful investment tools. You don't want to be searching for a needle in a haystack when you're looking for a great investment tool. You don't want to be spending hours, you don't want to be spending a lot of money to find that great investment opportunity. It is our responsibility at GRIP to deliver you both investment products as well as powerful investment tools to make sure that your experience at GRIP is full of delight. This
So,
is
sorry. Go
Yeah,
ahead. Yeah, I was just saying, so we will talk about investment tools and all the innovation that we have done in that space. Can you just speak for 5 seconds on what do you mean by great investment products?
Yeah, I think there are two parts to that, right? And Weber, maybe you can go to the next slide, which will help me visualize it. One is offering choice, right? And within the fixed income space, which we are focused on, and we believe people should build a healthy portfolio there, is to make sure that you have a choice as a customer across the risk reward spectrum, whether it be FDs, which are small finance bank or NBFC FDs, debt mutual funds, bonds, and SDIs, covering everything from 8 to 13%. GRIP is the only platform that offers you the spectrum of investment options in the fixed income space. Equally important is to make sure that within this, the options that are selected are all investment grade, which means they're all triple B and above rated. They all have incredible institutional co-investors and have gone through the most rigorous diligence process and come from a market where there is enough supply. So you're not getting the absolute bottom of the funnel, you're getting high quality opportunities that you would be excited to invest in. This is what we mean by great investment options.
Yeah, and of course, this is the white space that we want to cater to in terms of fixed returns. And on the either side are, your FDs of large banks, which are now at 4.5, 5%, and beyond 13% is your equity market. But where we are all aware that it is ridden with a lot of volatility and market linked returns.
Absolutely.
Um,
Yeah.
okay. This was the part of great investment products. We are heavily focused on fixed return products, and our aspiration is to become the India's one-stop destination for all fixed returns. Now let's talk about the other part that you spoke about, which is powerful investment tools. So how do we even begin thinking of, while we are co-creating these powerful investment tools, what is the philosophy that we go about while building them?
I think as a company, we spend a lot of time talking to our users. We spend a lot of time looking at other industries, and I'm not just meaning investment. I think we look at other companies and industries who are consumer-first companies, and from there, we, as a philosophy, try to pick up what an investor will want from their experience on GRIP and from their investment experience with respect to fixed income. And many of us have heard of Maslow's hierarchy for how human beings interact and what they want. I think there's a very similar hierarchy of needs that also an investor wants. It begins with something as simple as is my transaction secure? Is the money I am making or paying secure? And it goes on over a period of time to concepts like reinvestment. At grip, we wanted to make sure that we solve for this entire hierarchy of things and then some more.
Okay.
um, Maybe I can talk a little bit about each one of them and what we have done to solve them as a company. Starting with security, Grip was the first OBBP platform to integrate with the stock exchange, with NSE, and allowed an investor's funds to directly be wired to the NSE, removing any third party in middle. So an investor's funds never even go to Grip, they directly go to the stock exchange or the settlement part of the stock exchange, and the units come back to the investor within T plus 1 day, completely eliminating payment risk and counterparty risk. This began the journey of OBPP and ensured the first requirement of an investor, which is security.
Yeah, just just reiterating, very important. Money from the investors goes to the exchange, and the securities also go to the exchange. They get settled on T plus one date, and all the securities or bonds are credited to the demat account of the investors.
I think the
Yeah,
second
second
part,
one is access.
absolutely, and access to us means some opening up a market which is 10 trillion rupees annually to retail investors for 100 rupees. How do you access the same products at a ticket size or a minimum investment amount that you want? We're very proud to be the first platform to offer a 10,000 rupee face value bond, a 10,000 rupee face value SDI, and in fact, the first company to ever list an SDI on the stock market. This has given flexibility for a user to start wherever they want. Today, we run something called Quick Start, which allows an investor to invest for 100 rupees in a Government of India bond and then climb the steps towards other products.
Yeah, great. I think ties back to the first slide on how big the market is, but how we are fractionalizing it for the individual investors. Um, yeah, the third one you spoke about was convenience.
Yes, and I think as we move up the requirement of needs, we also relied that customers, after becoming secure, after having access, then their requirements started to evolve. For example, they wanted to think about, okay, I can invest during the day, but can I also invest during the weekend? And can I also invest on holidays? Why do I have to be constrained by market hours? Number two, if I want to invest and reduce my risk, can I invest in a basket? We started thinking about solutions for this, often taking inspiration from other business models, equity markets, and started building features. I think because we are spending a lot of time talking to our customers, we were first to launch these features and make them available to our customers, giving them more and more power, more and more convenience.
Yeah. So just for all the new users on the webinar, Quick Start is something where you can start with 100 rupees in a Government of India bond, which is backed by sovereign guarantee. So really a quick start for your fixed return investing journey. However, the webinar is not about that. So let me just move on. Um, okay, so we discussed security, access, and convenience. Now, liquidity.
Yeah, I think this is probably the penultimate evolution of a customer's requirement. A happy customer invested for a while, but always may require some amount of liquidity for an investment, for expenses, and they must have access to their funds. I think liquidity forms the basis of actually some of the most vibrant markets and products in the world, and offering this in bonds was obviously critical. In Feb this year, we launched Sell Anytime, which allowed users to sell their bonds prior to maturity and get instant access to funds. And once again, we're proud to have been the first platform to do this.
Okay, great. Um, okay, so finally, not taking a lot of time on what we have already done, and to introduce Infinite, for which we are all here. Um, okay, why don't you just like speak a couple of lines, and then we would go to the unveil.
Yeah. for the long apologies for the long preamble, but I think it's important to explain where we were coming from and what got us to the point of thinking about infinite. I think the journey of thinking of everything from security to sales allowed us to also understand one more need that our investors had, which is for reinvestment. And Infinite is a solution for enabling automatic reinvestment to happen, which delivers the promise of compounding. I'm going to request Vaibhav to play a small video we have, a launch video, and then we'll talk about why we did it, how we did it, and what it means for you as a customer.
Okay, great. Just let me know if there are any disturbances.
What if your money didn't just return? It grew itself. Bonds pay interest like clockwork, but those returns disappear into your bank every month. No growth, just a number in your account. Great wealth isn't built, it's compounded. Let us show you how. You invest in a secure bond. Your returns start flowing in. Earlier, those returns just sat in your bank account, earning 2 to 3% returns. Now, they get reinvested into a debt mutual fund. Automatically, your gains multiply into fresh capital, which goes back into bonds. Bigger, stronger, smarter. The cycle continues, and the compounding begins. Money to the power of infinity. From the creators of AMO and Sell Anytime. From the team behind SDIs and baskets. India's one-stop destination for fixed income. Grip Invest launches an industry-redefining feature. Infinite. The power of compounding on autopilot.
Okay.
Yeah, we're excited to have this launched. It's been a number of months working under the hood with a large section of the GRIP team. But we believe this is really a redefining moment for fixed income investment. It solves some of the key pain points around this, and we'll talk a little bit more about that journey and what it means.
Yeah, so I'll just request the audience. So while we walk through this, please put your questions in the chat box, and we'll take those questions towards the end. Okay, so I think we spoke about the needs of the consumers. We walked that bridge up till liquidity, and then we started thinking about reinvestments. And before you just start, Nikhil, I just want to set the context because we are talking about fixed returns. Most investments that do on GRIP give you monthly returns, either of interest or principal or both, and hence the need to think about reinvesting that money that uh, goes back into your accounts. And yeah, so I'll just hand it over to you, Nikhil, if you can just speak through this.
Yeah. So let me try to explain this through a very common example that we see on the platform and also somewhere the inspiration for Infinite. Let's say you invest 1 lakh rupees in a bond that gives you 12%, which means you'll earn 12,000 rupees of interest in a year's time or 1,000 rupees of interest every month. That 1,000 rupees comes to you on a specific date, and more often than not, it doesn't get reinvested. That's the consistent feedback that we hear from users. So it lies as idle cash in your current bank account, in your savings bank account, earning 2 or 3% until you one day realize and decide to reinvest it. Most of us would sweep it into a fixed deposit, which would earn maybe 4 to 6% at the current rate. We're also often, not because we don't like the money or we don't like compounding, but it's a lot of hassle. To worry about that 1,000 rupees every month is a hassle. To think about reinvestment Imagine if you're now getting 5 such returns on 5 different dates, the hassle becomes more. Not only do you have to do the manual effort of it, but you also have to make a decision of where it will go every single time. These were the complaints that our users told us. This is what we were trying to solve with Infinite. And it wasn't simply about solving one objective, but finding a solution that solved all of these objectives. We ran a very simple calculation. We took multiple bonds and SDIs and we looked at the cash flow of all of them. And we did the working to say, what if a customer did not invest them and just kept them idle? We realized that a customer loses almost 30% of potential interest earnings from not doing reinvestment. 30% of interest earnings.
Yeah.
This is something
And just like when we were running the math, this number surprised us as well.
Yeah, I don't think, and we all talk about the power of compounding, and we all understand it. But the flip side is that if you don't deliver it, that's the loss that you have. That's the power you also lose. So when we started seeing these numbers, we realized we had to solve for it within obviously a completely regulatory construct, ensuring that the investment can be done completely automated and it can be done for any ticket size, right? The interest you receive could be 1,000 rupees, it could be 100 rupees, could be anything. And that all went into design thinking of what we wanted to build at Infinite, which is an auto compounding product completely on autopilot. Yeah. Vaibhav, if you want to add.
Yeah, just to put things a little bit more in perspective. So, let's say an average user, and because there are also, our engaged users on this webinar, if you have made an average of 10 investments on Grip, which is in our top 10 percentile is much larger. It goes up to 50, 60 investments on Grip. And if we say just 12 investments, 12 repayments in a year, that becomes 120 to 150 returns to be tracked, which is the third point, tracking the fragmented returns. It's very hard to keep investing those returns very diligently. See, all our users still come and reinvest. However, the manual effort and decision fatigue is very high. All of this becomes automated with just a flip of a switch that we will just show. They will all get reinvested into debt mutual funds. These debt mutual funds are also managed by very, very reputed fund managers and names. And one thing that Nikhil we should still speak about is while they are invested into mutual funds, at any point of time you can break that and reinvest into your investments of your choice. So that power is also with the user in this feature.
Yeah, that's a very important point, and I'll just double down on it before we go to the next video. At no point of time should you feel that Infinite locks you in. The reinvestment is going into debt mutual funds, which are completely liquid, right? At any point of time, you can exit, you can stop the Infinite, you can modify it, you can pause it, whatever you want. We've always believed in giving power to you. And so there is complete flexibility in this. This is not a lock-in product, and you can stop at any point of time you want. Why don't we go into the demonstration of an actual user journey on the Grip app in using Infinite, and we'll understand this better. Because it's a mobile frame, the frame is vertical, so some of you may have to zoom in. But now this is available for all users from today morning on their application. I'm just going to show you how I invested in an Infinite product a couple of days ago. Yeah, Vaibhav, please start.
Okay.
All right.
Yeah, so just, Nikhil, can you just walk through okay, 1 second, I'll have to go back. So this is the first page that you will encounter on Discover. There are, all these CTAs on, can you just begin from there?
Sure. So this is the Discover page on the Grip app now. And there's a banner to help you understand what Infinite is. I'm going to go to the CTA, which is the bottom, which is Invest, where new investment options are listed, and we'll begin the journey there. I have gone into the invest tab, and you can see bonds, mutual funds, SDIs. I'll go to an SDI, for example, and I'll look at the various investment options available. I am picking up an SDI called AMU and opening it to see the details about this offering. When I look at the visualized returns, and I'll ask Vaibhav to take a pause here, you can see that every month this SDI, like all SDIs, pays a monthly principal and interest. If I'm reading these numbers correctly, I will receive about 5,000 rupees every month as returns from this investment opportunity. The pain point earlier was, what do I do with 5,000 rupees? How do I make sure that it gets reinvested? And that's where Infinite comes in. Like a typical user, I will go and, I like this product, so I'm going to go and make an investment. I can choose various payment options, which is UPI or net banking. Many of you would have already seen this on the application. The order is getting processed with the National Stock Exchange, and I am getting redirected to a payment gateway to make the payment for purchasing the bond or SDI. That is step one. For beginning Infinite, you need to purchase a bond or SDI, and then we will reinvest its returns. The payment process is complete, and I'm now a holder of this bond or SDI. On this page, GRIP now gives me two options. As you can see in the blue box at the bottom, it tells me my returns without Infinite, which is, as an SDI holder, what was I expected to get? And it then tells me the returns that I can make with Infinite. And we'll now go into how that number comes into working. Let's say I decide that I want to reinvest my returns. I can press the Activate Infinite button, and I come onto a new page that is now available on GRIP, where I can decide which bond or SDI returns I want to reinvest, and where I want them to get reinvested.
Just one
yeah, no worries. So as you can see on the top is the name of the...
Just one second, I'll have to... Yeah.
As you can see on the top is the name of the SDI I just purchased, which is SDI AMU. And at the bottom, it shows Nippon India Dynamic Bond Fund, which is a debt fund offered by Nippon India, and where I'm getting reinvested. I'll draw your attention to the number at the below the chart. It says 193% more returns. So reinvesting my returns from the AMU SDI increases my interest on this SDI by 193%. So not the up to 30%, which is an average, but in this case up to 193%. As we mentioned earlier, the power is with you. You can change which fund you want to invest in, and I'll request Vaibhav to just, So all various mutual funds are listed, including liquid funds, arbitrage funds, income arbitrage funds, but no equity funds, right? We do not currently allow equity funds. It's all fixed income oriented funds like credit risk, liquid, dynamic bond, income arbitrage funds. And I, as an investor, can choose which one I want to invest in. In this case, I have picked a fund which is an Axis Bank fund, and my returns are now 172% higher. And then I press Activate Infinite.
Yeah, and if you just see all the reputed names like Nippon, Axis, Aditya Birla, so you can also do your research on that.
I have to enter a one-time OTP, which is an authorization to the mutual fund AMC for setting up an auto e-NASH mandate, and that's it. Infinite is now set up. Each of my returns for this SDI, which is maturing in December 27, so roughly 2.5 years away, each of those returns will get automatically moved. Moved into the Axis Bank mutual fund, reinvested there, and when the last payment of the SDI comes, the SIP will automatically stop. So there is no more SIP after the last payment of the SDI, and the SIP will stop. That's how we have designed it. Once again, at any point of time, you can choose to stop the Infinite, restart it, and move the money out of the mutual fund into any other investment or expense that you need to make. we have also updated the portfolio section where you can go now and see which mutual fund you purchased through Infinite and which SDI or bond you have invested in is now set up for infinite returns.
Yeah, so just on this, to give enough portfolio tracking, if you now go to your portfolio section, you will see a section of My SIPs. In this SIP, if you see, this access was set up just now, and it will also tell you link to which original asset is the SIP linked to. So all this information is on the portfolio. Okay, I am seeing a lot of questions on can we do this on our existing investment on the grip? So let's just address
Yeah,
that, Nikhil.
absolutely. So the second part of this demo is exactly to answer those. Um, we we did not want to leave anyone out. So if you have an existing investment on grip, you can set up SDI. You can set up Infinite. It doesn't make a difference whether that investment was 1 year back or 1 day back. Infinite is available for all of your previous investments. I'm going to show you how that works. Sorry, Vaibhav, if you can just go back. I missed speaking about the portfolio view, please.
Actually, was it?
Yeah, you
Yeah,
can
here.
play from here. That's fine. Yeah, that's okay. Okay, so I'm going to go to, just give me, bear with us for 10 seconds. I'm going to my holdings. These are my old investments. And once again, I think I picked up an SDI as for this demo. So I picked up an SDI investment I had done a while back called LAP IREP. And on the right hand side, you see the three dots, sorry, where once I clicked was an option to activate Infinite. Weber, if you can pause here,
Yeah, yeah, I'm
you will
pausing.
notice that this transaction was a while back. From the bar, you'll notice that some payments are already received, but that does not stop you from activating Infinite. You can do the same journey for any bond or SDI and just press activate Infinite right within your portfolio section. Let's go ahead, Vaibhav.
Yeah, this I don't know why this is. Every time I pause the video, it goes there.
Sure.
1 second.
Okay.
Just 1 second.
Yeah.
Yeah, so we had just selected the LAP IREP, three dots.
And then back to the same screen. Again, choice is yours. You can pick which mutual fund you want to activate Infinite for.
And just one second, Nikhil. So if you see here, this bar is telling you how much more returns with Infinite. This is all dynamic. We are not playing with static numbers. So in the other one, you saw 180%. This one is 80% more returns.
Yeah.
And this is a function of how many residual payouts are still remaining and what is the payout structure. Is it both principal and interest? How the principal and interest are amortizing to you?
Same process of a one-time OTP for eNash mandate. And that's it. Infinite is now set up also for this investment that I did in the past. Okay, I hope that demo was helpful, but you know, I think we've invested a lot of time in the journey that you will have as a customer. We've also put in a lot of tutorials inside the app, and I'm hoping that it will be smooth when you try it out. If it isn't, please call us. We'll always be able to make sure that you get the right advice on how to use Infinite. All right, Vaibhav, next.
Okay. Yeah, as always, we have tried to make the product journey as seamless as possible. Still, if you have any doubts, if you are interested in Infinite, if you want to know more about it, please write to us at invest@gripinvest.in or reach out to your dedicated relationship manager. Um, okay, this is a segue. Okay, we will come back to Infinite in our Q&A because I see a lot of questions coming in. Just another on on a unrelated note, this month was our 5 year anniversary. So Grip has now turned 5, and on account of that, we are doing a 5 day campaign for, it's a way to celebrate our fifth anniversary, and fifth anniversary coupled with this infinite launch. We are also offering up to 50 basis points higher on all deals on the platform. I think it's a great time to go interact, go engage on the platform. I don't have to tell our regular users, but great time to do both, start your investing journey, regular users start your infinite journey, and this is already on. This went live yesterday, and it is on till 1st August 5 p.m. So 5 days as Grip turns 5, and of course, thank you all of you who are blood and soul of Grip and keeps us going.
Yeah, and also thank you for all the insights that led us to build the infinite. I think Vaibhav and I get an opportunity to talk about it and share about the thought process, but it ultimately at the foundation level comes from all the conversations you have with us. Every time you send us an email complaining to us, we love it. It allows us to make things better and keep improving. So thank you so much for everything that you send us. Please continue to share your feedback, and we'll make sure we continue to improve how we deliver at Grip for that. Vaibhav, you want to move to Q&A? I think there are lots of questions we should try to cover.
Yeah. Um,
Okay. Do you want me to take the lead?
yeah, I'm on both screens, so if you can.
Sure, and let me do that. So, I think let's start with questions around taxation and the flow of money, because I see a couple of questions there. Um, Vaibhav, so maybe you can take the first question. What happens to the returns from the bond? Do they come into a user's account, or do they go directly into the mutual fund? And how is taxation done in this case?
Yeah, so all bond returns will go back to your account, and I will just take a moment to explain how it is being done behind the curtains. Basically, when you activate your infinite, you are signing up a SIP mandate for your payments to be reinvested into a designated mutual fund that also you select at the time of activating infinite. So the returns hit your account, and uh, because we already have a predetermined schedule, these returns are then invested via SIP into these mutual funds. Um, yeah. You
Yeah.
want to add anything, Nikhil?
That's absolutely right. So it's two in a way two independent systems. As a regulated entity, as an OBPP entity, the returns from the bonds have to come to your account. That's the law, and we will not obviously try to interfere with that. The money comes into your account, but you don't have to do anything. You have set up a mandate, an eNash mandate with the mutual fund, and the and almost instantly the money is then gone into the mutual fund. So no action required from your end. From a taxation perspective, the taxation for the bond remains the same. There is no difference in taxation. There is TDS, there is taxation applicable, and the taxation for the debt mutual fund also remains the same. You can obviously choose to invest in an arbitrage fund or an income arbitrage fund, which has lower taxation than a typical debt fund if you want to optimize taxes, but the taxation of both has to be paid, and it does not change that. The last part of the cash flow is what happens at the end. So let's say you had a 24-month bond, all 24-month returns went into a debt mutual fund, and now your SIP is over. There will be no SIP on the 25th day, on the 25th month. The money, all of it is now reinvested into a debt mutual fund of your choice. It is your decision. You can continue for it to be reinvested, for it to be invested, you can withdraw it, or you can take that money and invest it in another product or a bond or an STI. It does not automatically get debited or does not automatically get credited into your bank account.
Okay. One one related question. Can I put a cap on what amount, say 5%, that can be put in a bond to achieve diversification and manage risk? Nirmal is asking this question. I don't think it's a full question, but yeah.
Yeah. Um, so Nirmal, if your question is, can you cap the money, the percentage of interest that goes into a debt mutual fund through Infinite? The answer today is no. The only option is to reinvest 100% of the money and not a smaller portion of it. If you're saying if you want to cap a bond investment, obviously you have the choice of picking a smaller investment amount on the platform, but that's how you think about the entire portfolio and not something that we have as a portfolio selection tool today.
Yeah, there was also one question that I came across, not on this webinar, but good to address it here. So, in some instruments, both principal and interest come back. What if I only want to reinvest the principal but not the interest?
Yeah, I think today Vaibhav, the way Infinite is designed is to reinvest both principal and interest, and then allow an investor choice to discontinue it if they want. But for the time being, it's a it's simple. All cash flows post TDS, which is exactly what you receive in a bank account, will be reinvested into a debt mutual fund.
Yeah, I think I'll just add one thing here that these are all liquid funds. There are also mutual funds available on grip which are zero exit load. So um, even if both principal and interest get reinvested into that mutual fund, you can always, according to your needs, just um, just withdraw that at any point of time without exit loads. It still is a better compounding than keeping it into a savings account for a future need.
Yeah. Okay. Vaibhav, the next question, which I think is important to talk about, is what happens in case there is a delay in the payout of the bond? Um, what happens to the SIP? There could be a delay because of a holiday. There could be some increase in interest that is received. In those situations, how does Infinite work?
Yeah, you want to take that?
Sure. So uh, the SIP, so we have built a buffer between the date of payment of the bond and the date of the SIP to account for things like holidays, etc. Because we also get information about delays, increase in interest, the system is built in a way that it is automatically adjusts and changes the SIP amount so that you get the benefit of reinvesting all of that. So that system is programmed in a manner to adjust for any kind of changes that may happen on your bond returns.
Yeah, similar question. What happens to the money in debt fund once the bonds have completed their tenure? Do they get credited to the bank account automatically? One thing I have to say with these quality of the questions, I think we are the proposition is already proposition is already understood. That's why these are like really good quality questions. Just to answer that, once the tenure is completed, this will be your mutual fund corpus in that mutual fund. Again, it will not automatically get redirected to your bank account, and the rationale is simple that if you don't need it, you let it compound in that mutual fund, and whenever you need it, you can always withdraw it and reinvest either on grip or for your other needs.
Yeah. I'll move to the next question, Weber, which is, can I stop Infinite before my bond tenure end? And maybe worth reiterating whether Infinite can be set up for a existing investment. You want
Yeah,
to take
so
both?
I also see a lot of questions again that can we activate Infinite for already purchased bonds? Yes, you can. Go to your My Holding section. It will show all the investments that you have already done. There is a three dot button which will give you the feature of activate Infinite, and you can just do the same process again. Um, Sorry, I forgot what was the first question.
The first question was, can I stop the bond? Can I stop Infinite before the bond tenure?
Yeah, again, you can stop it at any point of time. Here, again, go to your My Portfolio. It will have something called My SIPs, and you will also see those SIPs linked to your original investment. Uh, it will give you an option to deactivate that SIP at any point of time.
Perfect. One repeat question coming up, Vaibhav, is around the ability for an HUF to invest in both bonds and then activate Infinite. Do you want to take that?
Yeah, so HUFs can invest on grip. It's not related to Infinite actually. HUFs can invest in all instruments on grip and also do the Infinite. Um, just the KYC process for HUF is different from KYC process for an individual investor, and we can always help you out with that.
Yeah. In fact, that reminds me, there is no additional KYC for a mutual fund or an infinite investment on GRIP. If you are already a bond or SDI investor on GRIP, there is no additional KYC step. We may require your nominee details, but that's it. And so the journey to bring this into your portfolio is also fairly straightforward. Um, there's a question from Mohinder on whether earnings from various bonds can be directed into the same debt fund. Mohinder, that's correct. You can choose the same debt fund for all of your infinite investments, and then all the corpus will be in the same one, or you could choose different. Power is completely in your hands. Um,
One appreciation message from Jay Krishna. Awesome effort, very great. I was doing the same manually. Now I see the autopilot will do it for me. Thank you so much, Jay Krishna. It makes our hearts full.
Okay.
Uh,
Related question to HUF is the eligibility for NRI investors. On that one, Nirmal, NRI investors today are not allowed to invest in listed securities, debt securities in India, and hence we are also not able to offer infinite to for NRI investors. We are hoping that changes in the future, but this is today a regulatory limitation. Yeah.
Is
Um,
Infinite applicable for SDIs? Yes, Infinite is applicable for both bonds and SDIs. In fact, I would just say it makes Infinite is even more powerful for SDIs for the simple reason that in SDIs both principal and interest are coming back to you every month, so that possibility of idle cash is higher.
Yeah, I would just add that there are only two cases where infinite is not applicable. Number one, if the remaining tenure of your bond or SDI is less than 2 months, because their reinvestment doesn't only of 2 months does not make much sense. Second is if your bond or SDI is not paying you monthly interest or is paying you an annual interest. Once again, there a SIP has less relevance. So apart from these two cases, both bonds and SDIs, all bonds and SDIs have infinite available. Vaibhav, let's move to a question on the mutual fund itself, which is the mutual fund a regular plan or a direct plan? And are there any expenses related to additional expenses related to infinite?
Yeah. So here, these mutual funds are regular plans. They are not direct plans. And we will just talk about. I am also seeing people are asking that we now see mutual fund as an asset class on GRIP. So let's just Nikhil, let's just talk about that also. To cover the other one, there are no charges uh, there are no charges to activate Infinite. It's basically an autopilot mechanism to do it. There are no charges whatsoever for this.
Yeah. Perfect. So, many of you may have realized that we, launched mutual funds. Launching mutual funds and Infinite happened almost back to back because mutual funds is what Infinite reinvests money in. I think the thought behind mutual funds, and when we refer to mutual funds, we are referring to debt mutual funds, was once again to make sure that we offer you all great investment products in fixed income. Mutual funds are nothing but bonds, and in certain cases bonds and SDIs offered and managed by very large professional AMCs. You can invest at a small amount, which is 100 rupees. Typically an AMC will have a mutual fund will have over 30 bonds in that, and you can have instant access, right? Instant liquidity. You could choose to exit today, and the money will be with you in 2 to 3 days, depending on the rule. Um, all of these great features made us, and the fact that it fit so well into what we want to build at Grip, made us launch mutual funds as a product a few weeks ago. And you can also invest in mutual funds outside of Infinite, both as a lump sum investment and as a SIP investment. To make things simple and to not complicate you with too many options, we have tried to curate certain specific schemes which achieve different objectives, and then identify AMCs which have delivered the best fund performance or manage some of the largest corpuses in the industry, which mean they're highly trusted. If you look at the slide, you could if I start from the left, we've offered schemes like credit risk and dynamic, which are slightly better for longer term investments, give you better returns, close to 9 to 10% in investing in a debt mutual fund. They invest in a mix of bonds all the way from AAA to A, and the funds are actively managed to give you good yield for better risk management. The second category is your income arbitrage and arbitrage. These are categories that have been launched to give you a flavor of fixed income, but with the taxation of equity. Sorry about that, but the taxation of equity, which is a 12.5% taxation if held for 24 months in the case of income arbitrage. Income arbitrage has a maximum of 65% debt and 35% arbitrage, which is where there is no equity risk. The equity investments are hedged against the futures and the cash market. And finally, the last category, which is liquid, which is basically investing largely in government securities, treasury bills, or highly liquid AAA rated corporate bonds for short-term investment. So 3 different objectives: credit risk for higher return mutual funds, professionally and actively managed; arbitrage funds for a flavor of debt with lower taxation; and liquid funds for overnight parking and completely safe securities. And we're obviously very excited to see the uptake of mutual funds even without a full launch, but it allows customers to now build a fixed income portfolio wherever they want. Vaibhav, if you'd like to add something.
Um, no, I would just urge people. So, infinite is one thing, but there is a need, or there is definitely a space in your asset allocation for debt mutual funds or fixed income mutual funds and all that. I think most people even today understand mutual funds as only equity mutual funds. These are great when you are riding out an equity cycle, you have something as a future need, you want to plan a goal based setting. These funds have a very very long track record that you can look at, and of course all reputed managers.
Yeah.
Um,
I want to take a couple of questions that have come again on the chat box. So one is, um, what happens if, for example, Grip is no longer in the picture, right? And because we're not handling any money, then what happens? Um, Rishi, that's the great part, right? So in the case of a bond investment, the NBFC, and there's a trustee, a SEBI registered trustee for every transaction, have to continue making you payments directly. That payment is not dependent on whether Grip is in the picture or not. Same way in the case of a mutual fund, you will continue to receive payments directly from the AMC for whenever you want to sell or any kind of dividend or interest payouts. And in both cases, the units are held directly by you and not through Grip. So your risk is completely mitigated against our business, and you are directly investing in these securities. So you should take that as the first level of cover that we provided through the security features that we built, and the way the money moves for you.
and yeah,
Please go ahead.
I was just extrapolating it to infinite, and now when your returns are invested into mutual funds, again, it is bankruptcy removed from Grip. Grip has no bearing on that. Your corpus is now with that AMC and with that mutual fund, which is, of course, highly regulated.
Yeah. Perfect. Just to reiterate, the power of Infinite is in your hands. We are not mandating or we're not selecting a mutual fund for you. It is available for all new investments. It is available for all past investments. It is in your choice which mutual fund to invest in. When the bond payments stop, the SIP will automatically stop. The SIP will automatically stop. You will not be required, nor will you be charged anything extra for not making a SIP payment in the month after the bond. If you have activated Infinite, you also have the power to deactivate Infinite and stop your SIP, withdraw all your money, and what you do with your money is completely up to you. There is no obligation continuing. You can reinvest it, spend it, all on your choice. What Infinite does is simply give you the convenience of setting up an autopilot reinvestment feature into a mutual fund of your choice for however long you like to do it. And we hope that by doing this, we are taking away a very large inconvenience in your life, at the same time giving you the power to earn up to 30% more returns through the same principle that you originally invested in a bond or a grip, in a bond or an STI. We'll continue to improve. We already have a long list of Infinite 2.0 journeys that we want to do. We'll continue to improve your experience and give you more and more features to make this powerful. But I look forward for you trying it out, experiencing and giving us feedback as you always have. Vaibhav, maybe any closing remarks from your side before we wrap up, since we are, we've already taken
I
short over time.
I just want to address one last question, and this repeatedly came during our waitlist users. We got a huge traction from those users, but one question that came up was which this audience will now experience when they go and activate Infinite is my returns are in the range of 10 to 15,000. The SIP is for 10 to 15,000. Then why is the SIP mandate much higher, to the tune of 1 lakh?
No, thanks for bringing that up. I think it's a very common practice actually in the mutual fund industry to take a mandate, and mandate is simply like it's like a cap, right? The mandate is typically kept higher so that you can give a mandate once and then keep using that limit to set up or make more infinite payments or mutual fund payments. Think of it like a UPI, right? So our UPI cap is 1 lakh typically, and you can make UPI payments up to 1 lakh rupees in a day until you change the cap. The mandate operates in the same way. It's a cap amount, but it does not give anyone, any AMC or any mutual fund, the right to take or debit your account for more than the SIP amount, right? So please don't worry about the mandate number. It is being kept at 1 lakh just from a convenience point of view as a cap. It does not mean that is the money that is getting debited, and the right to debit that money comes directly from the mutual fund only for the specific SIP amount that you have authorized. If you are choosing a UPI based mandate, that number is 1 lakh rupees. If you are using a net banking based mandate, that number is 10 lakh rupees. And simply because your first transaction itself is 1 lakh in case of a net banking transaction.
Okay, all right. Yeah, thank you everybody for taking time on this evening. We are very excited about this feature. We were excited while we were building it. This excitement also comes from the fact that it is such a win-win proposition for all you investors, and we would love to see your returns going higher from 30%, 40%, 100% on these investments. Please try Infinite. You can again, as you can start your investing journey at 100 or 1000 rupees, you can also start your Infinite journey at a SIP of 1000 rupees. So yeah, and we are here to help you out if you face any issues. Okay. All right. Thank you so much. We will wrap this webinar here.